Okay guys, welcome to the next video in this little series here. Now, one of the things that I had referenced earlier is that there were applications for using multi-time frame here. Now, this is probably a good time to circle back to it. Now, with the applications for this, of course you could use it under any circumstance if you preferred it, but the reason we built it in is specifically for people that don't have as much screen real estate perhaps as they'd like, right? So for someone working off of a laptop, or maybe they got a laptop feeding a second monitor, something like that. Now, I don't use this myself because I have the luxury of I've got 6 monitors in front of me, and so I've got plenty of screen real estate. But if you have limited real estate, this could be very useful. That's why we built it in. So for example, now for me, this would be a typical line. So for example, if I was on vacation, right, I was just working off my laptop, this would be a time where I would use this. Now, for me, as a day trader and a relatively short-term trader, I like to be in and out of the market relatively quickly. So for me, the 15-minute is my larger trend. That I know that's where institutions live and breathe and hunt. So I'm always mindful of what's going on with the 15-minute. But in an application like this here, if I was looking at the swing structure and supply and demand zones, that type of thing on a 15-minute, well, it's entirely possible, particularly with the kind of volatility that we have right now, where we have massive candles on a 15-minute chart. That's going to be way too much. So an application would be, I could load the indicator twice. Let me just go over this to you. So I could have a 15 and a 1 minute on the same chart. All right, so let's start with the, let's see what I've got here. Let's start with the 1 minute. So you'll note, I've just applied the indicator twice. Now the first one, you do have to check on multi-time frame. Right, that's got to be on. And you've got to tell it what time frame you're going down to. So here I've got a 15 and a 1. So I'm checking that on with both of them. One's the 15, one's, right, but this has to be on. Now the other thing that you have to do, you'll note the difference here. Look at the Y position so that they're not on top of each other. So if I go to the first one, that's at a 90, right? Nice location up here. Now of course you can move that if you need it. So for example, our news indicator, right, puts all the upcoming news up here, and you wouldn't want that on top. You wouldn't be able to see it. So you can move this down to 220 or whatever the case may be to have it show, or you move it on the right side or lower corner, wherever you want it, right? I'm just showing you that you don't want to have this at the same number, or they'll be on top of each other. Kind of ruins the point. So just something to do a little experimenting with it. Let me show you an example here. Once you've got it applied twice and you've got your multiple time frame and you're clear on what the 2 time frames you want to pursue. Let's see. So here, there's a couple other things here I want to show you. But if we're looking here, I can see the swing structure on the 15-minute. And you'll recall earlier I said it was optional as to whether or not you wanted to have it identify the time frame of the break of structure or change of character. Well, if you just got one chart open in one application, it's a bit redundant, right? It's just taking up screen real estate, so there's no need to have it tell you that's a 15-minute boss. But if I put the 1 minute on, well, I got a whole lot of additional information. So for example, I could be looking at a 15-minute chart and then look for the 1 minute swing structure or supply demand zones. Now in this particular application, because the zones are so big, which is the next thing I wanted to show you, I've got it set to only show me the wicks. So on this 15-minute chart, I've got some pretty precise zones for entry. Now of course, if you're working off of wicks, you're putting yourself in the situation where the potential to miss the trade is there. It may not get into the wick, right? But I mean, well, so how did these work out? Look for a few examples, right? Well, here we can do this one. Well, you had it in the next bar. Remember, this is a 15-minute bar, so you had one here, you had one here, you had one here. Oh, how'd that work out? So it's $2,000 here. That's going in, that's yesterday's close. Excuse me, that's yesterday's close. Now we're coming down here. Look at these two right up here. Right, it's literally into the wick. Now, even if I had one chart, if I was looking at the 15-minute and I saw 1 minute supply zone up there, I'm likely going to switch over to the 1 minute chart. But just so you can see it. Oh, what do I want here? I want an arrow, right? So look how it's kind of identifying. Oh, don't miss that. How'd that work out? There's $1,000 here. $2,000 up, $1,000 down. Same thing's happening here. Right? We'll get into some examples here, but I just wanted you to recognize that that's an interesting feature that we built into it just for those applications. It's somewhat circumstance specific. Now here, let me show you this now, because this is this time period in market history is a good time to show this. Of course, we have some of the most extreme volatility. I've been doing this for 30 years. This is about as extreme as the volatility gets. So, for example, this is now of course on a 15-minute chart. So if I look at this demand zone, that's 100 ticks. Is that offering us any benefit really as a day trader? Really not, right? I mean, I can see it, but I don't need to have that giant green brick. And then here I've got multiples on top of multiples, right? It's confusing, it's cluttering the chart. I don't need it. So there's a couple of ways you could deal with this. Of course, you can always turn these off and then just draw them to your eye. So if you didn't want that whole chart and you just, well, nothing would keep you from drawing the wick down here. Now here we're crossing one day to the next, but just to show you the example. Pretty nice entry right there. So that's what's one possibility for you. Just draw them in. The other, if you have it set to wick, let's go over one. Let me go just back to the 15-minute. If I have it set to wick, well, really what it's doing is it's identifying, here, this would be a good example. It's telling me there is a demand zone in there, but do I want to see a little bit more of it? Or even here would be a good example. I might turn this around. All right, so I can see this is just the wick of the candle, but if I wanted to, for whatever reason, to draw the entire zone, well, I could just draw it myself. All right, now here's an example. If you were just down here waiting for the discount zone here, you may not catch it, but note, right, if you're looking at this one, that's about as close as you can get without getting stopped out, right? And you just work there, that's the actual demand zone right there, right? But this is the last down here, right? We don't get a new low, so this is the last swing down before you get the break of structure. So I can see it, and as you get better and better with this, you'll get to where you can recognize that at every break of structure, you're going to see a demand zone or a supply zone left behind. So you don't necessarily need it. But when you're first learning, it's helpful to have the zones on. And often just during the day, I'll turn them on or off and say, oh, did I miss one? Can I spot them? So it's just another option for you. We want to give you as much flexibility with regards to how you apply this, because we don't want this to overwhelm what you're already doing. The idea is for this to augment and complement anything that you're already doing, not to replace it. So with that said, here I think I covered what I wanted to with regards to making sure you understand the multi-time frame. And of course, there's no limit to the number of times you could apply it. So my partner who does the coding here likes a 1 minute, 15-minute, and a 4-hour. He's often working off of a laptop, so he has the need for that. Myself, again, this would be as much as I would do it, right? Because the 15-minute, that's what I'm watching. And then the 1 minute for entry. Just options available to you here, and of course, right, if this is just too much for you, of course, turn them off, change the time frame, right? That would be the first thought I would have. Well, let me go down to a 1 minute and turn them on here. Oh, all of a sudden, okay, that's better, but again, this might just be too much, right? Do I need them? Do I want? Okay, where is it? Now? If I switched it to just wicks, that's going to isolate it, so it becomes just a little marker, like, oh, okay, I know there's one right here. This one, right? Well. It's easy to get sidetracked into all the examples that are right here, but that's a beauty, right? So here's the come back into the demand zone, up we go, break of structure. Where do we stop, right? As we're opening the market, we've moved from demand zone to supply zone. Okay, let me pause there. How are we doing on time? Oh, okay. Well, let me pause there here, and I'll go through a couple of examples just from today, just to keep the examples as current as I possibly can. Okay, back in a second. Okay, guys, so I've just fast forwarded here now. So it's just just around 1 o'clock here on Wednesday the 30th here, same day, just progressed a little further in the day. Now, additionally, I've added VWAP here. I'm going to assume most of you are aware of how that, well, not to get into a training on VWAP, but that will be a magnet for the market. So as we get too far away, we'll work back to it. If we get too far above, it just becomes a natural magnet for the market. So with this here, I thought I would stop here because this is just so very common. This is, if you're a day trader, this is something you deal with all the time. So here we're at 1250. Now, a couple things to note at this moment in time. Well, here's my last break of structure on the 1 minute. So the current trend is down. I've got a weak low because this is the last high that did its job, that gave me a new low, right? So if you were considering a short here because you wanted to be in sync with the current trend on the 1 minute, well, of course, you could go over to the 15 minutes, see are you in sync with that longer term trend. You may or may not be. It's not that you need to only be trading when the 1 minute and the 15 are in sync, but I would like to have an awareness of that. That said, if I'm looking at this trade, well, I can be logical about a target. Let me say it that way. So I've now broken the initial balance. Well, of course, this. Again, I tend to digress. There's the IB trade. Well, this is where we typically will take it from the IB low to VWAP, right? So what? Oh, this is a trade to look for every day. 25 ticks right there. Anyway, so as I carry on here now, back to the point I'm trying to make. There's the last break of structure. Now this is all chop. I get a little change of character here. It's very short-lived, and all we're doing is just wicking through, right? So really, no, it would not be unreasonable to think, oh, I got a bunch of equal highs here, right? So clearly, is this enough to call it a double top? Well, it would seem like a logical place to find resistance. Okay, so let me take that off. Now, having said all of that, we know the current trend is down. Well, let's put my supply-demand zones on. Well, now you look up here, and you can see there's a ton of them up here, right? So that would be an application where you would perhaps want to choose to either draw them yourself or just go to wicks or keep them off, right? It's up to you. But I want you to focus down here, not up here. So let me take that up here. We'll focus on where we are right now. We've just had a major break of the initial balance. We've come all the way back to VWAP, right? So back to home base. Now what are we going to do? We're going to reverse the trend. Here's the very typical time, right? 11:10, Europe's closing. Between 11 and 11:30, often this is when we get the reversal for the day. So is this the start of it? Well, if it's going to happen, we got first target is we got to get back to VWAP. So here we are sitting in VWAP. Pardon me. We've just tagged VWAP and we're sitting in a supply zone. Now, is this enough to trade? Well, certainly it would be, right? If you were, let me draw it up like this. So I would propose to you this is not an unreasonable risk here. So you're risking 87.50. What is your target? What's your target in this trade? Well, I mean, you can use random targets. You could use the next demand zone. You could use this one. You could use this one. You could use this one. But what are we really targeting? We're really targeting the weak low. So if I'm a seller up here, look at my risk reward. That's almost about 7.5 to 1. Just on the first target of the weak low, the low that has not done its job. Now, if we go out here and we take out, we'd have to go all the way up to this high. You see how it's noted up here? This is the swing high. We'd have to go all the way up to that high and close above it to change the structure, change the trend. So at the moment, trend is very much down, at least on the 1 minute. So I'm looking here saying, do I like this? Well, here, let's just play it a little bit here. What have I got? 20 times. Let's see how we move here. Okay, so note what just happened. I've got a second zone that's been created. So again, this may be an application where you look at it and say, okay, do I want both of these zones here, or do I just want to draw them, right? So the most recent one will be right here, right? So now if I put these back on, now it's getting a little crowded in there, but you can see the zone. That's the last down before I get up here as I sit in the zone. So I'm in the zone within the larger zone. So let's just play it forward here a little bit. Oh, we get a little pop there. We're kind of hovering. Now this would be where you'd certainly want to be paying attention. Maybe you're watching a footprint chart. Maybe you're watching the DOM. Maybe you're whatever it is that helps you with timing here. This would be time to be paying attention, right? So now look what we're doing here. We're over the discount. We're in the premium zone of the internal zone of the larger zone, and we just had a tick go above. Let me pause it here. So you can see this here. This one little wick, that's my arrow, goes just far, come here, arrow, goes just far enough to get into the premium zone of this supply zone. So what's my risk reward here? All right, so let's use it precisely. Well, we know it's going to be about 7 to 1, but I'm entering I could use my stop. I'm entering right. Let's do 1 tick beyond. Okay, so I'm risking here 8 ticks, right? That's the other side, which would be the other side of VWAP. I'm risking 8, and my target is down here. So I'm looking for now, assuming we're in here, we fine-tune it a little bit. So I'm looking for a 7-to-1 trade on this. All right, let's just play it forward, see how we go. What am I at? 20. All right, so if you missed it the first time, you're like, oh, that's looking, that's starting to get my attention. Just anything, whatever, indicator, something, footprint, whatever you're looking at here that tells you, hey, heads up. Well, if you missed that first little dip, you got a second chance to get on board there. Do you see the low here, the internal swing structure? Pretty tight. Now we're starting to head down. What have we done so far? All right, so far we're 23 ticks. Coming into the next demand zone here. First one broken. Note, as you'll recall, when they break, they go off the chart. So not an unreasonable place to take a partial here, assuming you're in multiples, right? Or it's just up to the individual trader. Not a bad place to take a partial, but we still have a target down here. Now here's the retrace that likely would make you a little nervous. But thus the benefit of trading with multiples. So you can take one off here and let one run because you got a clear target. Let's let it keep going. Okay, so well, now we're threatening this zone. I've created a new zone because now I've got a new range. Breaking that zone. When it closes, now note what just happened. Remember, in this particular case, when I get a close below, that zone is removed, right? So now I've left one last little zone here because it's the last up bar before we start to head down. I'm still working. My entry was based off of the zone up here. I got a target down here. Let it play a little bit further. I don't think this takes too long. We'll go to 50, 30, 50. We'll get there right there. So we're still just sitting comfortably. We've got a target. We've taken one off if you're in multiples. Otherwise, you're riding this. Maybe you're trading micros and you took 1 or 2 off here, and you're going to see if you can get after that weak low, and we can make that target. The play, oh, okay, what are we doing? We're hitting the demand zone here. Is that going to scare you? Well, here's the new zone. Now we're coming down. We're in the new zone. Where's our target? We're almost there. Oh, is it going to miss it? No, it's not going to miss it, right? So you see now look what just happened. So why I wanted to stop it right here. This was the weak low. Now I have a new weak low. Because this high did its job. We retrace. I get a lower high. Now this high has a job. It breaks this low, so I get a new weak low. So if we're going to start to retrace here and come back towards this, we got a new target. Now, just because you have a target doesn't mean we don't go up here and break, but that's so you know, right? There's a logic to it. Pretty nice looking trade, right? So you got your 7-to-1 off of this. And what was nice here is it kind of stalled in here, gave you time to get on board. And if you missed the first one, you got multiple opportunities to get in there. Pretty good example. Okay, let me pause there. We've got, I'm going to show you 1 or 2 towards the end of the day here, and we'll wrap up this video. Okay, back in a second. Okay, guys, I'm fast forwarded here to 3:28 in the afternoon, the end of the day. Now, so any of you that were trading today, long drift lower throughout the course of the day, and it started to accelerate as we went into the last hour of the day. This last push down here, of course, it's most dramatic on the 1 minute. But note what's just happened down here. We've come down and we banged a demand zone here, and we had a pretty decent reaction off of that. Now, one of the things that's important, and this is in trading in general, let alone this particular approach, but I would advise you to consider this. Someone taught this to me a long time ago, and I repeat it, and it's a bit of a mantra in the back of my mind because by nature, I'm a counter trend trader. If it's going down, I'm looking to buy it. If it's going up, my natural instinct is to want to sell it. So I have to repeat this little mantra so that I don't give in to my natural tendency, which is to be looking to pick the turn. So it goes like this. Buyers at lows create new lows. Sellers at highs create new highs. Now, why is that? Because if I'm a buyer down here, if the market rolls over, my stop is just below, right? So if you look here, the buyer's here, the buyer's here, the buyer's here, the buyer's here. As the market rolls over on them, those stops are triggered. That's more fuel for more downside. So let me rephrase that. I would advise that for longevity as a day trader, that you never try and pick the turn. There's just no. It's just Occasionally you're going to get it. Yeah, you will, right, if you've got skills. But you don't need to do it. The risk reward is not worth it. So, okay, there's huge reward here, but it just, again, it was huge reward here and here and here and here. So at this moment in time, we are in the last half an hour of the day. Now, this is just a tendency in the market. It's not an absolute, but it is a very strong tendency. The market, when it gets too far from VWAP, is going to want to work back towards VWAP towards the end of the day. If it gets too far above, there's a tendency to work towards VWAP before the close of the market. So right here, as I sit, I'm 31 points away from VWAP. Long way back. Now, can it get through? Note, right, obviously, supply zones all the way, massive supply zones that it will have to break through if it wants to get back home before the close. So if you're looking for that, well, that might be the first reason you might go, that's a long way back to VWAP. There might be a trade here. But we never, it's just, let me rephrase here. I would suggest you never try and just buy that. What you want is to at least first, and this approach at least qualifies it for you. At first, give me a change of character. Can I get a higher low that leads to, it doesn't have to be a break of structure, but can I get multiple changes of character here? So I've got some indication that the market is starting to rally. Well, if I can get just that, well, now what have I done, right? Of course, I've left behind down here a little demand zone. So if now, of course, the risk of this is you're going to miss the thing takes off on you, right? And it does just go straight, right? That will happen. But over time, this will serve you well. Now, we want to wait for the market to come back and pick up any unfilled orders. If this comes out of here too quickly, you want to see some defense here from late in the day buyers that recognize that, or it could be institutions saying, well, we got to get back to VWAP for the close of the day. That's what you're looking for. The breaks, the changes of character, and then one time back into the demand zone for a reload. That I can't make this stuff up, right? It's just, let me show you what comes. Oh, what are we on? 100x? That's too fast. So let's go down. Here we'll go to 30. Okay, so the market, we've had this nice little reaction here. Oh, okay. Well, now, so there, you might be wondering, oh gosh, are we just going down to break the low? Because, oh, pardon me. Let me pause this a second. Trend is still down. So you are certainly going counter trend here. This is currently the week low. All the more why you want to be cautious about being aggressive down here. The market has been in a sustained downtrend here. This is the week low. So if this trend is going to continue, the expectation is that that low gets taken out. What's just happened here? I mean, that's a pretty good move, right? I mean, off of this, well, that's 45 ticks. That's already over $500 move right here. Now, do you want to sell that? Well, that's up to the individual here. I'm very reluctant to do any selling at the end of the day if the market is too far below VWAP here because of this tendency. And often you see these end of the day ramps as institutions take advantage of less liquidity at the end of the day. They do it because they can. And often you'll see massive rips after the market closes, after 4 o'clock, right? They do it because they can. It's not illegal, so they take advantage and do it. So let's just let this play here. This would be a question mark for the individual, right? So you'd want to be looking at every tool you've got to say, do I want to be a seller here? Now look at the time. And we're going into the last 25 minutes of the day. All of a sudden the market's starting to accelerate. Now look what just happened. With that change of character here, and there's a break of structure that you can't see this behind it. Look at the trend. The trend is now up. Now we're in the last 3 to 4 minutes of the day. VWAP is up here, and all of a sudden I'm starting to show signs of strength. Let's let it play again. Oh, let's go up here. We'll go to 50 so you don't have to sit for too long. Okay, what just happened? All right, so here's the new range. So I've had one change of character with a break of structure here. That's the break of structure that changes the trend to up on the 1 minute. Now you could easily look at this and say, well, hey, I got a little zone right there. We wicked through it, but we didn't break it. Now I'm eyeballing that because I have a change of character here. So I have a change of character here. So I know if I wanted to focus on that wick, that this might be a reasonable spot to anticipate some sort of a reaction. All right, here's an example why you don't want to be one tick below it, right? You want to give it out because a wick can go through and not not create any change in trend, right? This is kind of what I'm trying to say. So if you were looking to be a seller, well, you've had the change of character. Now you're coming back to it. Why would you be reluctant to sell here? Time of day and VWAP is up there, right? This is nuance here, and there's no reason why this couldn't pivot here and go take out the low. Except remember now, this is no longer the target. This is the week high. Important that you understand that. This was the week low. There's a break of, you can't even see it. It's behind. Oh, you can't see it, but it's behind the change of character. You can kind of see the blue in there because this is the low. Here's the last break of structure. This is the low that caused a new high. This is the low that gave me the low here that caused this to be the week low with the break here. Now this is a low and this is the week high because at this moment in time, I just want to be sure you're following here. Why is this the week high? Because at this point here, now retracing back, it did not do its job of giving me a new low. So it becomes the target now. It's the week high. I'm hoping it takes a little. You just got to get used to it. Okay, so now there's the test. Okay, well now with that break, now note here, this is now the week high because this didn't do its job, and now I've left behind two demand zones here. I'm into a supply zone. It's tricky here. Now also, we got 12 minutes left to go in the day. VWAP still up above. Let's let it play. Now, do you want to sell it there? Well, how'd that work? Now, the difference here being that if I wanted to sell that, and it weren't in the last 9 minutes of the day, if I wanted to sell that, I'd want to see. Oh, let me redraw that. I'd want to see it come back like this, right? So I'd want to see some. Okay, give me a change of character, get in there, and maybe I'd go after a week low here. Remember, again, we're at the end of the day. The trend has flipped up. This is now the week high. That's even though it's in a supply zone, that's the target. I've just come back to a demand zone. Right, so here's the internal high low, and here's the last major swing low here. This low here, now targeting. Okay, right. So if you look what we just did here. Now we are into this last little demand zone here at equilibrium here. You're at the 50% of that. So just put one tick into the discount. Now, could you take that trade? Look at everything that's just happened. I can't. This is right out of the line drawings here. Oh, look at this change of trend. I'm coming back to the demand zone. Stop right. Oh, I can never get that thing off my mouse. If you think back to the very first video where we talked about change of character with a flip. Okay, change of character, flip of trend because I had a break of structure. You could have waited all day for that. That's as perfect gets. Oh, let me get this on here. And our stop is a little bit below the low. Yeah, that'll work. Target. VWAP. So what am I after there? Let's call it 10 to 1. There's 10 to 1 right here. So I'm risking 112 to make 1,125. Let's see if I can push that off to the side. Can I do that? Oh, I guess I can't. I thought I could move it. There we go. All right. Okay. So there's the target. Here's the setup right out of the playbook. First test, supply zone, new high. Now I have a new week high. Made it to the supply zone. VWAP still at the top. Looks like you got 9.5 to 1. I think after it goes about 408, 409, it actually tags VWAP, right? Horses back to the barn. That's how I think of it, right? So just to give you, I literally, that's the most current example I could possibly give you. That's in the last 9 minutes of the day, just a textbook setup, right? You wait, right? So I mean, could you have made money here? Yeah, you did. But when this happened and this happened, would you have been a little bit concerned? Well, of course you would. But if you're patient and you wait for it here, once you got in here, it was never threatened. Here's the break of structure. And you know there's a tendency here. So this is just a great example. Something to think about. Okay, guys, there you go. We'll keep them coming here, but hopefully it's starting to make sense. You're starting to recognize what you're looking for and how nicely this can fit in with everything that you're already doing.